A third of the people love you, a third don't care about you, and a third hate you. So you concentrate on the third that love you and you go for it.
I think the greatest Achilles heel for leaders is they don't give themselves time to think.
So my journey is one of those, there are a lot of detours. There's a lot of going off on the side roads.
Thrive Out listeners, you're in for a treat. We're here with Jamal Mashburn,
Jesse Itzler,
the John Maxwell,
Jackie the Joke Man Martling, New York Rangers great Mike Richter, Lisa Lampanelli, Mary Carrillo.
Oh, how nice.
I'm actually going through the practice of being an entrepreneur.
Pick yourself up, brush yourself off, and thrive loud.
Get ready to thrive loud with Lou Diamond.
I love it.
Welcome, everyone, to another episode of Thrive Loud with Lou Diamond, connecting you to the most inspiring and amazing people that are thriving each and every day. I'm your host, Lou Diamond. Today on Thrive Loud, we have the founder of Unison, the smarter, better way to own homes, who leads the company's overall strategic direction. He has more than 20 years of experience building large-scale consumer finance and investment management businesses. He has been on the board of Outward Bound. He is an avid sailboat racer and kite surfer. I'm going to love this guy. And he launched the world's first junior kiteboard race team. We're going to have so much fun in this conversation. Thrive Loud listeners, Thomas Sponholtz. Thomas, how are you today?
Very well, Lou. Thank you for having you on your excellent show.
I am excited to have you for a lot of reasons. Our Thrive Loud listeners love hearing about new ways that people can do something. And I think it's a really interesting story because I came from the financial services world a long time ago. And I have been a homeowner for all too long. And I get a lot of mail from you guys, and I see a lot of you guys out there. This is a unique idea that your business is focusing on. What I kind of want to hear is a little bit of a ramp up before you founded this company to get an understanding about you. So, Thomas, if you could, give us that runway to get on the highway so we understand exactly how Unison came to be.
Yeah, so I'm from Denmark, and I was working, I spent my entire career really trying to think about better, smarter ways to solve really big problems. And really, the nugget there is really focusing very, very keenly on the person you're solving the problem for and the ecosystem that can benefit from solving that problem, and then trying to forget everything that's in the middle. So it's really taking things that are just out of legacy has turned out to maybe not benefit the end users as much as possible. So the way that has come into fruition is in a couple of ways leading up to Unison. Starting as far away as I can from that was I was involved in basically transforming the Indian Railroad from being very old-fashioned and having a fail-safe system, which is the red to green buttons that train conductors can see,
yes,
to where they had lots of accidents because the English, when they built this railroad that's 130,000 kilometers long, had put in iron wire, and as the locomotives over time grew bigger and bigger, they would turn the signal. So green or red would turn green, and then, accidents happen. So in that, I was part of leapfrogging the system from really very ancient technology straight into fiber optics. And that led to then starting basically moving from fiber optics straight into mobile and building the first technology factories in Hyderabad, India, which is now the Silicon Valley of India. So really just going straight from having basic technology to everybody in India having a cell phone and being able to communicate. So solving a big problem rather than just advancing linearly from iron wire to copper wire to landline telephones, and really just leapfrogging the entire technology. So I like solving problems that way. And
okay.
The way that leading fast up to Unison now, after coming to United States, in working around a lot of different financial innovations such as iShares, you might know, which
yes.
I worked at Barclays Global Investors and launched the first fixed income ETF or iShares there, was really a much smarter way for retail investors to get very effective exposure to an asset class without the drag on the returns from different types of expenses, and really using the best technology that the biggest and smartest institutions were using to get exposure to the bond market. We are then taking that and building the tools that can enable the as I said, the retail investor get that exposure without the drag on from expenses. And then the way that leads into Unison is that as a firm, and this was Barclays Global Investors, which is now BlackRock, we have grown to being the biggest institutional investment manager globally. And when you're that large, it's very difficult to add new ideas that can keep driving growth and benefit to your investors, because you pretty much are the market at that time.
Right.
And so then we were thinking about what are some of the biggest problems out there, economic problems that we can solve. And very quickly, I focused, and I was luckily to get to be part of the team solving this problem. And very quickly, I focused in on residential real estate. And the reason was, and still is, that residential real estate globally and in the US is by far the biggest asset class. And it's also the biggest component of the economy. So if you look at, let's just take United States, since I believe most of the audience is from the States. There's $30 trillion of residential real estate in America. 15 trillion is mortgaged and 15 trillion is equity owned by 130,000 or 130 million American homeowners. Massive asset class, much bigger than the stock market, much bigger than the bond market. And yet that asset class didn't have equity financing.
Correct.
Now think about that. All other asset classes have equity financing and debt financing, but not residential real estate. So we're thinking about, wait a minute, what if we enabled 132 million homeowners to get access to the equity that they own in their house and make that a liquid investment and now include that in their active net worth? People would be making very different decisions in their financial life. What if we also enable new home buyers to get an equity partner when they buy a house? That would enable them to buy a house much sooner and really break this old notion that in order to live in a house, you need to own the whole house.
So
that is such an old idea.
So I've got some questions, Thomas, and this is good. I'm going to play a little devil's advocate and some questions here. Obviously,
go for it.
And I want to ask, when did this all begin? What year did all of this take place that the idea popped in the head about trying to focus on this market?
The first idea came in 2003, and I started the business in 2005.
Okay, so what happened? Help us understand, before I get into some of the specifics of some questions on how the process works, what happened when you dealt with the mortgage crisis and the financial crisis of 2008?
Yeah, we had launched about a year prior to the crisis. And one of the satisfying things that we saw, obviously, let me just first say, the financial crisis was very tough for a young company with a new idea. But we're happy that we survived and we came out much stronger. And obviously today we have benefited from having lived this through a full cycle in the economy, both a brutal down and then an upswing. So I can talk a lot about how this works for the consumer and how it works for the investor.
Cool. Well, definitely. I'm just more curious about, I guess, from the sense of dealing with such a shakeup in the residential community. Did that, as the leader of the company, 1 year before everything, excuse my language, basically went to shit, how did you able to keep the focus of the business going, knowing that this is what was the environment that was surrounding you?
Yeah, as I said, it was definitely very, very difficult. Our two largest shareholders, and I'll probably leave the name out of this conversation, but I'm sure your audience can guess. Both of our two largest shareholders was overtaken by their respective governments. One by the U.S. Treasury, and the other one by the Bank of England.
Got it.
All in a span of 2 weeks, and they were both AAA rated companies. So it was not fun. How we kept the focus was really from the just deep belief that I have that there's such a big need on both the consumer side and the investor side to get exposure and develop this capability.
Yeah.
And that was my purpose, basically, to use all my experience that I've gained throughout life to build this business. And that was unshaken.
Okay, perfect. And I like how this is going. So now, most people take on they need help from the bank when they try to purchase a home, because obviously they might not have all that equity up front to go do it. So therefore they'll take out a loan to try to, mortgage whatever it is. And obviously due to what happened in 2008, those very low percentages that you used to have to put down and then finance the rest kind of required much more credit analysis, required people to put a higher percentage down. Even recent tax laws have changed of what you can and can't write off of your mortgage payments, and lots of issues go on that. Help me understand the Unison model in the sense that, so if I'm going to look to buy a home from a consumer's point of view, am I partnering with Unison potentially to do this?
On the financial side, you are.
Okay. Help me understand that. Yep.
Yeah. So the way we talk about it is that you're purchasing a home, and you're acquiring a financial asset or property, right? So we divide those two things up. The home is really the reason you're doing it, because in a home, the way we think about it is an emotional place. It's a way you want to live your life, have your experiences, share moments with your family and your friends and your pets, and really a strong part of identity. And you want to make that really secure. And you also want to live in the area you want to live in, because that's the reason you're buying a home. Now, on the financial side, you're acquiring what's probably the biggest financial decisions you'll ever make and the biggest asset you'll own in your portfolio. So we want to make sure that that's done responsibly and in a way that's comfortable, so you can secure this as your home, meaning that that's the safest place of all. And so the way did you want me to explain the actual? Okay, so
I do. Yeah.
Good. So what we're saying is that when you acquire this home and property, the old way of buying it was that you stretch as much as you can, you go to the bank, and then you borrow a lot of money, and then you just pray that everything goes well, right? Because you're just pushing it. And that's a very old model. And what we're saying is that you should buy the home you want and buy as much house as you can either afford or your lifestyle allows you to do. You might say, well, I want to buy a house, but I also want to make sure I can take 2 fantastic trips a year. Right? So whatever it is that you want to do, buy as much house as you can afford or for your lifestyle. And then what other part of the house you might not want to, or you might not be able to afford, we own that part. But as a home, you get to enjoy the whole asset. So we're breaking up this idea that you need to own and buy the whole thing in order to live there.
Thomas, do I still need a third-party intermediary like a bank to help with this, or you guys are stepping in that role of acquiring the home?
Yeah. Would you allow me to just go very quickly through how the transaction actually works?
Yes.
I think that will bring it out to life for the audience. So imagine you're a young professional, you're 32 years old, you're an analyst working for a big investment bank in New York, or Deloitte, or PwC, or another leading firm in the city, and you're smart, you have a good salary, and now you're trying to buy your first house. And it's a daunting task in these metropolitan area where a starter home easily can be $1 million.
Right.
So let's take that $1 million as the home you're trying to buy. When you buy that house, you go to the bank, and then you take a responsible loan of up to 80% of the value of the house. So traditional mortgage, you can go to Chase, you can go to Citibank, and whoever you want to go to. You get the traditional 80% loan to value mortgage. Then you come to Unison, or you go to Unison simultaneously or before, whatever it fits in your sequence of buying the house. And then in a typical transaction, there'll be $200,000 of down payment required, and then the $800,000 mortgage to make up for the $1 million.
Right.
Off of the $200,000 down payment, that is the problem that most first-time home buyers having, because coming up with $200,000 in cash is a lot of money.
Gotcha.
And so we help solve that problem, right? That is really the problem we solve. So in that example, we can pay up to $150,000 of the $200,000 down payment that's required, and then you pay $50,000 of the down payment. So just to repeat, $1 million house, $800,000 mortgage, $150,000 from Unison, 50% from you, the home buyer.
Gotcha.
That means
that
means that you paid 5% down when you bought the house, right? And so with that transaction, then since we're not alone, this is pure equity, much like equity in a company. And in equity, the cost of capital, if you will, the return that this costs to do equals a portion of the change in value of the house. Much like a stock, when you buy a stock in, let's call it Google, your return is based solely on the increase or decrease in the value of Google.
Correct.
The same with equity financing for residential real estate. In this transaction, we paid 75% of the down payment. You paid 25% of the down payment. Yet, we share 50-50 in the future change in value of the house, up or down, including Unison can lose all its money.
Got it. So you guys become partners in that particular relationship from the home buyer side of the equation.
Correct. Technically, we are not a partner, but we have a right to become a partner. But we exercise that right in a split second when you decide to sell the house at any time you want to sell.
And I can expand this model, I imagine, from the other side of this. If I'm already a homeowner and maybe I want to do an expansion on the house or a renovation, and I need to tap into that equity of the home, Unison could be my option to look to as well.
That's right. So if you look at that issue, Lou, there in America, 84% of Americans have 80% of their net worth tied up in their home.
Yep. I know that all too well, Thomas.
That is just about the worst asset allocation I have ever seen.
That's true.
Okay. And we should not forget that a home is a volatile asset. In fact, a home is just as volatile as a stock market. Right. And then obviously millions of people experienced that during the financial crisis. So having 80% of your net worth tied up in your house or anything more than what is reasonable that is something that, frankly, the way I look at it, came out of the old system, that we were forced, because debt was the only option. We were forced to take on a bunch of debt and own way too much house for what is a responsible way to buy a house. So if you own a house, a great thing to do if you're looking to build an addition to your house or maybe get a different asset allocation if you're a baby boomer, approaching retirement, a smart way to really own a home is to own less and then diversify into other assets that are both more liquid and, as I said, highly diversifying.
So I like this, Thomas. My brain just went all finance on you. And what I actually like the most about this, and what our very wide-aged listener base can appreciate, for those that are young Gen Z or millennials that are thinking about eventually or starting to own a home, Unison can be an avenue for you. And if you've owned a home for quite some time, they're also an avenue on the other side. So you've got the range of home ownership on both sides of it. I like the angle that you've taken here. As the leader of the company, let's talk about some of the ways that you market, message, and run this organization. Because obviously we took it from the consumer side. Now let's spin it a little bit from being a player in this space. Help us understand where you sit in this environment, competitors, and how your organization has grown, which has grown significantly, by the way, over the last several years.
Yeah, the business has grown just unbelievably. We grew almost 400% last year. We're on track to grow about 200% this year. And it really is, the way I think about it is that the mortgage was invented in 1123 AD. And there's been no innovation in how to buy and own a home since then. And finally, now that's equity financing. And it just it's much better for the home buyer. It's better for the lender. It's better for the system. It's better for the investor. And it's really unlocking the biggest component of the U.S. economy for the benefit of everybody. That's what we do. We're basically just connecting two huge needs. One need on the consumer side, one need on the investor side, and then connecting the two to solve a problem for both of them. As it relates to competitor, our biggest competitor is inertia.
That's right.
Okay.
Not doing anything. One of my biggest problems that I deal with personally every day, but I love this. Keep sharing more about this.
Inertia is keep doing the same thing, or, well, this is new and different. Should I just do it the old-fashioned way? No matter how silly it might be. Now that the world has just changed in the way we buy and own a home to something that's so obviously better for everybody, then doing it the old way really doesn't make any sense anymore, right? So so that inertia of getting stuck in the past that's our competitor. How do we explain that the world has changed to home buyers and homeowners so that they can make better decisions when we take a lot of comfort in the old way, the way everybody else has done it for since 1123.
Thomas, let's do this because this is interesting. And this is one of the things, as you said, this has been going on since the year 1123. And changing behavior is difficult. Doesn't matter whether it's a technology behavior you're dealing with, whether it's how you pay homes, whether it's what you eat in the morning. Changing behavior is challenging. What is Unison doing from a messaging, communication point of view to demonstrate exactly what you're doing here on this podcast about this unique and smarter and better way to buy and own homes to the masses to help with this growth? Because there is some unique messaging in how you go about doing this.
Yeah, it is definitely unique. And how you speak about something completely new and different is not obvious because nobody knows how to do it. And when you're doing what I describe as fundamental innovation, that's normal, what I call normal linear innovation, which is you distribute an existing product in a new, smarter, better way. That's kind of linear innovation. Then there's foundational innovation, where you're really changing a system for the better by adding something brand new. The challenge with that is the one you're touching on. How do you explain that how this works when it's that new? Because people always get anchored in what they know. So now you have to do this whole new thing. And I'll go back to the very early days, just to give you an idea, in the very early days of the company, we just didn't know how to talk about it. We literally took the yellow pages and just called people and just start talking about it and see what resonated with them. And that was really the beginning of our journey. And that's now 10 years into it. Obviously we have gotten a lot better. We know what works, we know what doesn't work. But the beginning was literally yellow pages. And I can't tell you how important these steps are for a company trying to innovate, in really truly foundational areas. So that was the beginning. Today, it's we're doing two things on that side on explaining it. We are partnering up with great institutions that are helping get the word out to their clients, and then we are doing a lot of direct-to-consumer marketing, both digital, obviously a lot of social. Podcast like this, which is really an opportunity to explain it more fully. And then we also do a lot of direct mail, which is really the full gamut.
So I have a confession, Thomas. This is really funny. So we had some scheduling issues with our interview. We had to move it to the day that we recorded this, and it worked out perfectly. So we can put you in the queue for our FinTech week. And on the day that we had to reschedule this interview, I go upstairs and get the mail, and there's a message direct to mail in my mailbox from Unison. I started laughing, and I joked and was like, wait a minute, he didn't need to mail me personally to let me know that they needed to reschedule the podcast. We go, but it was great because it actually was very clean, clear, simple messaging in the materials. And
that's good to hear.
Yeah, and your website and your on brand and the way the message was, and in a weird way, very similar to your very kind personality, you can tell you're trying to help. In fact, the tone of trying to help someone as opposed to trying to sell them something. And that was evident in the communication that came through. So kudos to your marketing department and your messaging. It's really coming through.
Would you allow me just to speak a little bit to that, because that's a very important part of both the business model and the culture.
Please.
And I think this is a little bit different than most businesses, because we are really the only player in this space of any size, and it's so new, right? So it's an opportunity to build a financial business model where you have complete alignment, which is highly unusual in financial services, between the end user, the consumer, and the investor. And that's the opportunity that we've taken here, where our clients and our investors are both winning to the same event. If the house appreciates, they both win. If it depreciates, they both lose. And that's the same for the company. So really taking that and making that part of the culture, that also means that we have a strong incentive to educate the consumer and help. Because none of us win if it's not a completely transparent and beneficial relationship. And it just begins with us helping you buy a house, or helping you get access to your equity, or helping the investor get exposure to an asset class they otherwise couldn't get exposure to. So it's really creating that alignment, and how we both win and lose in the relationship creates a situation where we have each other's best interest in mind. So the investor wants the homeowner to win. and the company wants the homeowner to win, because if they do that, they win themselves. And that alignment is very, very unusual in business and even more in financial services. And it's frankly something I'm very, very proud of in building this business. And that culture I'm glad that came through in even something as simple as a direct mail flyer.
So Thomas, this is a good question. Incredible growth from this past year and continued growth into the future. And obviously, growth in this particular space not only means the growth on your online platform and how people access you, but that might mean geographical growth. Or does it? Tell me the strategic plan on what's next for Unison.
So today we're in 30 states, pretty much all the bigger areas around the country, with the exception of Texas for some regulatory homestead rules. We'd love to be in Texas, but the local constitution has to change there. So 30 states, it covers close to 90% of the value of real estate in America. We really want to be everywhere, so that is the strategic plan for the United States. In extension of that, we are launching in Canada later this year.
Oh, great.
And then we're looking at 2 different markets in Europe as well. This is very much a global problem, and how you buy and own a home across the Western world. So we're very much focusing on solving not just the U.S., but really a global problem that exists.
So now my finance mind just clicked in and asked the question, are there other asset classes where the model that Unison has could be relevant? Auto, other things, other assets?
We have thought about a couple other ones. I would say the most natural extension is into commercial real estate, where there is equity financing, but not so much in the small and middle market. We don't really have to move beyond residential real estate, given the fact
it's big enough.
Everything else would be minuscule.
Right. Fair enough. It was a curiosity running through me here.
Fair enough. Call me if you find one.
No, you got it. So Thomas, here's the question I love asking the guests on this program. And look, you've done a spectacular job thinking about this from when the company started, having to deal with the turmoil of the markets, clearly messaging the company in the way it is, to now seeing really great growth to 90% of the U.S. market here in the country, and who knows what's next. Even someone like you has quote unquote off days you're at your best. When you, Thomas, have trouble thriving, who or what practice do you seek to get back on the thriving track?
Wow. I didn't expect that question.
We only keep you on your toes here on Thrive Loud, Thomas.
I'll just tell you what I do. How about that? It's that simple.
Yeah.
I go into nature, and I go for a long run, a long mountain bike ride. I go kite surfing. As you heard in the introduction, has been very involved with the organization Outward Bound, where you track for 3 months out in nature. And I'm a firm believer that you can solve any questions, uncertainty, problem you have personally if you just spend time out in nature. So that's who I consult. If you
I like that. I like getting in touch with literally your roots, or the roots.
Exactly.
Let's do the admin part and then 2 fun questions here. Share with the listeners all the places people can learn more about Unison, website, social media. We will put it in the show notes, but it always comes better when they hear it from you.
Yeah, thank you. The obvious way is to go to unison.com, and it's spelled unison.com. So go to the website. On the website, there are many ways you can get in touch with us depending on how you want to do it. We have a fantastic product specialist you can call to have a consultation, or you can surf around the website yourself, and there's chat. There's all kinds of ways. Then there's social media, Instagram, Facebook, and the full gamut. So please check it out. And if there's anything we can do better, we would love to hear from you.
Thank you. Okay. Now for the fun stuff here. Not that it hasn't been fun from the very beginning, Thomas. So here's the question. Let's go with the signature one first for Thrive Loud, and I would love to know what your all-time favorite movie is.
Today, my all-time favorite is Lawrence of Arabia.
Oh, wow.
Yeah. It's an old movie.
It's a great movie.
It's a great movie, and that is my favorite movie, and I love the grit of
Peter O'Toole. Yes,
Peter O'Toole, and the whole movie. I mean, thinking about just what he had to deal with that was so unknown, and just taking a fresh approach to how to solve incredibly complicated cultural problems.
And now I know why that movie connects to you. You just answered it. That's your calling. Find the big problem and solve it.
Exactly.
I was just going to say we've had a guest on the show who that's his whole purpose in life is find the world's chewiest problems, how to get water to places they don't have it. You guys would get along. I'll do an introduction.
Exactly. I appreciate it. That sounds great.
So after the movie question, my other question came up because I opened with it and you mentioned it briefly here. How did kite surfing become kind of your thing? And I also want to learn more about this program that you created for this junior league of kite surfing. How did that all happen?
Back in the day, I was a professional windsurfer and did toured the World Cup. And then I got very busy working for many years. And then when I had kids, the passion flamed up again, but why windsurf when you can kite surf and go much faster? So my kids were very quickly pushing me in the direction of kite surfing, and now we're having a lot of fun together, the whole family, kite surfing. As it relates to the race team, was as you might know, the premier racing yacht club in the United States. There are two. One of them is St. Francis Yacht Club in San Francisco, where we are, and I'm a proud member there. And we had the most competitive kite racing going on, but we didn't have a race team for juniors.
Huh.
And in order to put the new generation together, we organized a whole group or team of juniors to learn how to race at a very high level, and invited the best coaches and Olympic coaches to come out and train these teams. And within a year and a half, we had our first world champion.
Oh, wow. That's amazing.
Yeah. And today, fast forwarding, that was at that time a girl who was she joined me. She was 14 years old, and today she's 13 years old. And today she just about, I think 4 months ago, she won her 5th Women World Championship coming up.
Oh, that's incredible. That's pretty cool stuff. I will tell you that I went down to North Carolina a couple of times and have kite surfed down there, and it's exhilarating. It does take a lot of upper body strength. I mean, actually, that was one of the things that I learned. Like, the more fit my core was, and the more stronger I was up top, I felt better to doing, because it takes you.
I will tell. That's the secret. That's when you know you're doing it wrong.
There you go. Thank you.
If you're trying to overpower the kite,
right,
you're not doing. You need more coaching.
Yeah, I'd only done it twice, but yes, that was evident. I just was afraid for my own life that I would take off and go to the moon. So
correct, exactly.
Thomas Sponholtz from Unison, thank you so much for coming on Thrive Loud today. This was great. Thank you for sharing what you guys are doing and continued success in your organization. This is exciting stuff and perfect way for us to wrap up FinTech Week here on Thrive Loud.
Thank you, Lou. Appreciate it.
And to all our Thrive Loud listeners out there, thank you for joining us. And until next time, keep thriving onward and upward. And remember, be brief, be bright, be gone.
You've been listening to Thrive Loud with your host, Lou Diamond. Make sure to subscribe on iTunes, Overcast, or wherever you get your podcasts. And follow us on Twitter, Facebook, and Instagram at Thrive Loud. Or find us on the web at thriveloud.com.